What's up, y'all? Big Mike here. Hope everyone had a good day and remained safe on this SPI. This is going to be video number 2 of the psychology series. What I want to focus on today is going over the psychology of algos or algorithms. The examples I want to use today are SPI and NAOV. So let's just start with NAOV because that was a mover from yesterday. The new norm. When I started trading, when a stock would trade 50 million, 25 million shares, that was a lot. And what we're seeing lately, 100, 200, 300, a billion shares, which we saw with Givo. So we're obviously seeing some type of institutional, bigger money presence make their way into small caps. You can't say this is Robinhood, retail. When a stock trades a couple 100 million shares, trades a couple $1 billion worth on a small cap trash stock. To me, that's just, you're obviously seeing a lot of players come into this market, given the difficulties in the macro edge in the overall market. So, what these algorithms operate on is an if-then basis. In a nutshell, that's how they are coded. If the stock does this, I will do this. If the stock does that, I will do that. And if you start to reverse engineer how they think, you are able to trade along with them. But what I teach in my room and what I try and do in terms of due diligence is I don't really do any filings research. I think it's in the short term very impractical to try and look at filings to try and figure out what the stock's going to do in the next 5 minutes. It's merely a supply and demand gauge. So I look for a couple of things. I want to define the share structure. So on NAOV, the float was around 5 million shares, and I want to gauge whether or not the stock is easy to borrow, hard to borrow, or readily available to short. This is going to help me gauge, is there a finite supply of shorts or not? If there's an infinite supply of shorts, well, to me, that's a red flag. Why? Because these algos, their job is to trap shorts. That's it, guys. Because let's think about it from this standpoint. If I'm a hedge fund, if I'm a $100 million hedge fund, and I want to come in and buy the entire float of NAOV, all I need is about $5-6 million worth. That's not a lot of money for a couple $1 billion hedge fund, right? So they can come in and buy the entire stock, but they have to dump by day's end in order to avoid potentially filing. Now, maybe there's ways for them to get around this if they have the shares in multiple accounts, whatever it may be. But what we're seeing is the exit move is what I call it. So these algos are coming in early, they're locking up the float, and they're using shorts to exit their position. Now, you probably say, how do they do this? Well, if you're short and you're trying to exit your position, you have to buy the stock. Well, if you have a big short squeeze where you have a bunch of shorts that are all looking to exit the stock at once, that's going to create very serious buying pressure. The algorithms are selling to the shorts as they're covering. This is the only way for them to exit. Because if I'm in NAOV and I got 5, 6, 7 million shares, I'm not going to be able to hit the bid and I'll crush the stock. They create their own exits. So if they're creating their exit, you need to think like them. And what we're seeing lately is, from a psychology standpoint, the first couple hours are crowded as hell. You're having shorts are very eager in a slower market. The first hour or two is always when there's the most emotions, most volatility. So you're seeing a lot of crowded action. So what they usually do is they're waiting until the afternoon in order to dump. They're using the stock all day, consolidating it, rotating the float, whatever it may be, and they squeeze the stock over high of day in order to do two things: make shorts cover and trap longs. That's their volume. They're selling to both people. They're exiting their position to both types of traders. So in NAOV's case, you get the high of day break. From a pure psychology standpoint, if I'm a bull, the stock has to hold the prior high, because that says that, all right, well, 135 was originally resistance, 135 is now support for the trend to continue upwards, to be a bullish trend continuation. And if I'm a short, from a risk management standpoint, you have to stop out over high a day, just from a pure mechanical trading standpoint, because if you don't, This is a bad habit you can form, and you turn into the add type of trader. So you can anticipate the exit, but you need to really manage your risk until you get that backside move. We're seeing the same thing, 1, 2, 3 o'clock, really big squeeze, and then what happens? They pull it into the close. And then usually the next day or two, it doesn't even come close to matching the volume. They are able to do this because they're learning how to squeeze shorts from a very methodical standpoint. This is something I talked about in a recent podcast. It's not out yet, but it discusses order flow and how my new opinion is that brokers are selling their real-time short information to these high-frequency traders. Now, going to SPI, this was no different than NAOV. The only difference was that the chart and the volume, that's it. NAOV did not have a daily chart like this. You had a lot of resistance on this sucker. You didn't have the same amount of volume. But there was no difference on this. This stock was not only crowded all day, was really the only mover on the day up until the afternoon when it created a bunch of sympathies. But they essentially squeezed this thing all day and then created their exit into the afternoon. Now, the takeaway from this, guys, is this is the psychology, understanding the market from a psychology standpoint is the raw truth. If you don't understand how or they're doing it, then you're not going to be able to trade along with them. So this is the exit move. And the psychology behind it is they're squeezing shorts all day and unloading into the close when shorts have reached max pain. It's a very painful lesson to learn. I've had my fair share of getting stuck in these stocks, but this is the new theme. This is the new recurring exit move. Squeeze into the afternoon and dump into the close. Any questions? Feel free to hit me up.